Happy Friday. Happy June 1st. We got something going on we want to make sure you guys were aware of. In March of this year, we put out a report after Signet had, and that ticker symbol's SIG. We put out a report that the stock had crashed, and we actually put out a report showing that crash could be a big opportunity. The stock at the time was $38.50, something like that. And, we just saw opportunity. We put out this report. We're going to screen share that when we get a chance. But what it was showing was Signet purchase intent mentions were actually for the first time showing a year-over-year increase. We'd seen multiple years of declining purchase intent mentions, which are we sharing now?
Yep, we're sharing.
All right. So you can see that the green line is purchase intent mentions. And what we saw was year-over-year continual decline in those purchase intent mentions, and the stock reacted appropriately. Terrible performing stock for many years. But what we saw in March was the first year-over-year increase in that purchase intent mention. And this is a very seasonal business because of the holidays and Valentine's Day. And so you can see those seasonal peaks year over year. And so what we saw in March was the first year-over-year increase that we'd seen in a long time. The stock had crashed. It was down around $38. And we thought, hey, here's an opportunity to potentially put something out. So we put out this report. If you're following LikeFolio on Twitter or wherever else, you could have downloaded this report for free. And the bottom line was, so Signet owns Jared, which, Nick, is a company that I can't stand their advertising.
Yeah,
drives me crazy.
He went to Jared. Hey, it's effective, though.
It is effective.
I mean, every time I drive by a Jared store, I'm like, oh, damn.
I know.
There's that ad in my head again.
I know. But, the stock was at $140. It'd fallen down under 40. And we saw some sign of, that purchase intent mention year-over-year gain. What we did put out a little bit of a disclaimer on it that it was a little too early to definitely call it a turnaround story.
Sure.
But especially with Signet's consumer happiness levels are like under 60%. So people are not happy with the experience of shopping in the stores. They're not happy with the branding and the advertisements. It's been on a decline for a while. And so we put out this kind of cautiously bullish pick on Signet at 38.50, something like that. Well, the stock has done well since then, especially since the beginning of May.
Sure.
I think it's gone up over 10%. We're in the 42.50 range. So if we can bring that up, yeah. So the stock, now you can see that last little run up.
It started early May. We were in the 36 price range.
Yeah.
And, I mean, it's run up to around 42.
So that's what I think that is people anticipating, finally anticipating what we saw in the purchase intent data, and that there's a possibility of a turnaround at Signet Jewelers. And so the stock has rallied nice, 10% from where we've sent out a cautiously bullish note. Unfortunately for Signet, what we're seeing now is actually that purchase intent graph, and I can't put it on this podcast for competitive reasons right now, but this purchase intent graph shows back to almost near all-time lows after that kind of peak in early 2018 during the big season. So with Signet is reporting earnings June 6th.
Correct.
Next week.
Yep, June 6th.
So we are officially taking off our bullish position on Signet. We're going to go ahead and book this, basically a 10% gain. We think the hypothesis behind the trade just isn't holding up now. And so, Will they beat? Will they not beat? I don't know. But what we're seeing looking into the future is just not strong. It's not strong enough to hold a beaten down stock into an earnings event when the purchase intent hypothesis that we got into the trade on is no longer valid.
Yeah, I mean, at the end of the day, it was a risky play, knowingly risky going into it.
Yep.
We saw something that was interesting enough to act on.
Yep.
And now we're seeing something that's, we were correct, and it was a great trade, honestly.
Yeah,
I mean,
great trade.
It's a great trade. And
10%
why
in 3
hold
months.
through this risky binary event when we don't need to? We can just book this 10%, move on, and call it a W.
Yeah. So that's what we're doing. That's what we're doing. I just, we wanted to update everybody because we put these reports out, and, with Snapchat, we put that out bearish at 19 or 20. Now it's down at 11. We've kind of taken that bearish call off with an update on Snapchat that you can get. Facebook, we put out that bullish note when it was going through the Cambridge Analytica stuff, and now it's at all-time highs. Amazon's at all-time highs. That was a
killer trade.
Yeah, so we've had some good ones, and this Signet one is not like a runaway success. We were cautiously saying potentially a turnaround, but now the data is not supporting that. So we're going to get out of the trade, take 10%, and move on. Now, from a technical perspective, Nick, you noticed something on the chart that there still may be an opportunity for technical traders.
Sure. So if you take a look at this chart, basically, we created a consolidation pattern with support around 36, resistance around 41, and we recently saw that break above consolidation resistance. Now, it hasn't created the full measured move to the upside. So the measured move would be the difference between 36 and 42. So we would expect it to go 8 points above consolidation resistance.
6 points, right? 36 to
6 points, yeah. Above the consolidation resistance, which would put us at 48. There's where my 8 came in.
Gotcha.
The high we've seen so far is 43.5. So technically, there's probably a little bit of room to the upside.
Yep.
But when you factor in the binary risk associated with the earnings event, it just doesn't make sense to hold from a technical perspective here, especially when we're really relying on the data here. Yeah. And any technical influence is secondary.
Yeah.
So let's just listen to the data and bail on this trade, book the 10%, move on.
Yeah, I agree. That's what we're going to do. If you want to make sure that you're getting these reports, make sure you're following LikeFolio on Twitter. We always put out the sequence of events is we put the report out to paying subscribers first, and then a few days later, we make it available via the Twitter account and Facebook, and we promote and have people go to a landing page. And you can get the report emailed to you, and then from there we push it out to news organizations and see if they want to, run with a story on it. Snapchat they did, Facebook they did, Signet they did not. So
not exciting enough for a headline for them.
Not that many people care about a potential turnaround story. It's stupid Zales and Jared, but. So make sure you're following at LikeFolio on Twitter to make sure you get these reports. But officially, we are no longer bullish on Signet, booking a 10% gain, and happy to do so.
Absolutely, booking those gains. And I should add, there's a huge amount of value in those first few days that the premium subscribers are getting the information.
Yeah, and that's a good point. The price on LikeFolio subscriptions is going up tonight. So if you've been thinking about joining, get grandfathered in, join now. We're doubling the prices tonight. We've got a good amount of demand, and we're expanding what the product is going to deliver to people. It's going to be exciting over the next couple of weeks. That's going to really ramp up what we're delivering. So we're excited about it.
Lots of growth and exciting things going on in the win zone here. LikeFolio is about to blow up.
You never know. All right. Thanks, Nick.